Welcome back to the show. Let's get into it today. We're going to be talking about an all-time high, and I do want to thank our sponsor, and that is iTrust. Maybe now is the time to do it. You can go into self-directed fund management, all sorts of assets, crypto, Bitcoin, Ethereum, gold, silver, you name it. It's all available over there. Of course, use our link down below. It's going to give you a $100 funding reward to get started. Get rolling over there at iTrust Capital. Let's go into our first clip today, and that is really talking about the surge on Bitcoin in general. Absolutely unbelievable over the weekend, and then obviously breaking all-time high again this morning, hitting 123. In just 7 days, Bitcoin has added 20 grand to its price. So a big one for many of you Bitcoin investors who are brand new. Kudos to you. I think everybody's starting to get a picture around where this could be going. The other thing that could be happening is we are going to continue to see shorts liquidated out of the market. Man, this is crazy for this to happen just in the last 5 hours. This, of course, coming in this morning. And I think as you watch the market develop, what we're seeing is still Bitcoin very, very strong, even on dominance. The idea behind this is when will some of these other tokens take place? We'll get into some of that here in a second. I do want to go to a clip real quick because this will get into Anthony Pompliano on what's driving the trend. Take a look.
First of all, welcome to the greatest show on Wall Street. I think that Wall Street's full undivided attention now is on Bitcoin. Everyone wants Bitcoin. Like, this is no longer a contrarian trade. This is a consensus trade now. And so you have the ETFs, you have the Bitcoin treasury companies, you have retail, you have sovereign wealth fund. Everybody wants Bitcoin.
Should we be scared of that? Meaning, we were talking about just economists and analysts. We're like, when the economists have a consensus view, you usually should go the other direction.
Yeah, well, the economists still don't like Bitcoin, so I think we're okay. But if you take a look at, the S&P, everyone wants the S&P, right? And so what you want is persistent kind of price-insensitive buyers. And that's finally what Bitcoin has. And it's not just coming from retail investors, it's also coming from these institutions. And I think that'll continue to drive the price.
Does it matter what Congress does anymore?
I think that Bitcoin has always been a decentralized asset that really didn't care what anyone else did.
But part of the bullishness was a friendlier administration, friendlier Congress.
Oh, it definitely helps.
Is the bill going to pass, the one that's pending?
I think that the bill will pass, but again, the bills, most of the bills are actually not addressing Bitcoin in particular.
Right.
Stable coins, market structure, things like that.
General crypto universe, though.
Yeah, look, obviously having an administration that created the strategic Bitcoin reserve, leaned into Bitcoin, I think is a very bullish element, but I don't think that Bitcoin was going to go down or not work if the administration wasn't positive on it.
All right, so obviously Pompliano really focused in on Bitcoin. That's been his narrative forever. But really this week, of course, we'll have a lot more narrative, I think, that will go into the rest of the traditional markets around crypto in general. The main thing is it's going to open up a lot of things that I get questions on right now by major financial managers, and that is what's next in these markets. And as we all know, that's really where we start to see a lot of these altcoins start to move. Here's Matthew Siegel talking about it. Vanguard Bitcoin is immature, has no value. Also, Vanguard buys 20 million of Master, becomes the top backer of Bitcoin's loudest bull. So you can kind of see, yes, that is the scenario in Wall Street where everybody's starting to understand, yes, the core asset is still a big part of the narrative of crypto in general. I want to go to another clip here because this is where they get into speculating, can Bitcoin make a run quickly up to 130? Take a look.
Because we just had a short-term model breakout literally like 10 days ago. And historically, Bitcoin actually rallied by 20%. So that would bring us actually to 133,000. But, an interesting aspect that you mentioned earlier is really that the retail investors are not really participating. For them, maybe one Bitcoin seems to be too expensive. But on the other side, we have, of course, a lot of corporates, a lot of institutional investors buying. And the Bitcoin ETFs, they have bought $15 billion over the last 6 to 8 weeks. And I think the most interesting aspect is actually that only 3 crypto exchanges have more than 150,000 BTC left. So there has been a lot of Bitcoins leaving exchanges. There's not a lot of Bitcoins left on exchanges. And I think that's why a lot of people are scrambling to really get their hands on Bitcoin, because again, there are not many Bitcoins left right now. Interesting point, because people are looking really at the round numbers. We're not looking at 122, we're looking at 130, we're looking at 140, we're looking at 150. We have a year-end target of around 140 to 160.
All right, so obviously someone really on the camp of where Bitcoins could be going. Eric Balchunas is talking about this and the narrative around ETFs, because ETFs have been kind of pointed as, well, is that the driving force? If you look at his tweet right here, and what he's basically boiling down is that during the last run and also during the GameStop era, we saw a lot of FOMO, a lot of retail. This time around, he's saying this is a different kind of investor. It is retail, but it's smart money. Now, how that affects the rest of the market may be much bigger and also less volatile. The question is it going to be as violent in terms of these upswings? That's the thing that I think we're going to be watching over the next few weeks and months as Bitcoin starts to dive in. This week, though, is a lot happening. And one of the things that is happening, well, we'll get three of the things. Genius Act potentially going through, the Anti-CBDC Surveillance State Act happening, and also the Clarity Act. All of this could be under definition and approved in a sense that we will get much more regulatory alignment. That, of course, is very good for all of crypto, including Bitcoin. Likelihood is we'll continue to see Bitcoin perform, I think, as we see more positive news coming out. Here's Matt Hogan. Big impact of crypto week. Legislation will reduce risk and downside volatility in the market. And I think this is one of the things that plays into why people are investing in Bitcoin and other assets that are circling around it, is that it is less volatile in the sense of they don't think we're going to see these massive 70% drawdowns. And that is a different kind of investor because it's now looking at an investor that is willing to hold through. And that is when Bitcoin continues to climb. And I think that's a factor everyone needs to pay attention to. B of A launches a new weekly periodical on-chain designed to drill into the various facts and evolving digital asset. Fact that B of A is doing this, come on, guys. This is definitely, I don't know what to say that it's top indicators, but it's definitely starting to show mainstream banking and finance is moving in this direction in terms of digital assets. All right, so I want to go to a clip here because when you think about crypto, a lot of people look at, is it secure? Many people kind of compare this to banks, more on the FDIC insurance side of things. Take a look at this clip. It kind of explains it.
Strong banks want strong regulation. Strong firms in this space want strong regulation. The reason we're so excited about Circle.
What happens when and if competition really comes into this space?
In stablecoins?
In the stablecoin universe, yeah.
I think there will be competition. I think Jeremy has always said there may be multiple, but the fact that Circle is open to everyone and not kind of a private stablecoin. The Fed wire was not invented by the Fed. It was invented by the private sector and then highly, highly regulated. We're going to see the same thing in stablecoins. You're going to see the Fed allowing the private sector, such as Circle, to develop the technology and then highly, highly regulate.
All right, and that will also start to create much more, I think, consensus around how these digital assets are going to be utilized. One thing to also compare is how the market has grown in just a very short period of time. The markets now have added another 1.2 trillion into market cap. That's since Trump basically started to pause reciprocal tariffs on April 9th. Now, granted, tariffs are still in play. And also, if you look at the overall market cap in general, let me zoom in on that, 3.8 trillion. People, we are close to crossing a $4 trillion market cap on the crypto and digital assets theme. This is a huge milestone in financial history, and I think maybe Wall Street is finally getting the picture. If you take a look at the overall market cap right there, holding at 3.76, and also if you look at fear and greed, this one is interesting because we had a big spike up over the weekend, now ranking at 70, which is moving into, of course, greed solidly. We haven't moved into extreme greed, but definitely on a tight window for an explosion. And this is something to take a look at, guys, because as we start to see this, that's when you start to see more activity from retail starting to flow in. Other things I want to point out right here, interesting on this is that there's still a lot of leverage shorts on ETH. Right now it's the record high and ETH is trading at above 3K. So this is getting to become a very risky trade with Bitcoin carrying ETH kind of on its shoulders up the charts. It could be one of those things where we see a major short squeeze coming in on Ethereum. So watch this because this happened on Bitcoin just last week. So could be some big indicators here. Strategic ETH reserve tops 4 billion. This is now backed by 50 entities. We're continuing to see growth in this, and I think this is another factor as we start to look at how treasury companies are starting to deploy ETH in their strategy, and I think that is a factor going forward. Right there, of course, you can kind of see BM&R. They added 163,000 ETH to their reserve, and most likely we're going to continue to see, remember, this is Fundstrat and Tom Lee. And everybody knows Tom Lee has had a very interesting stellar past on Wall Street, all of which have been calling the tops and the major moves you should be making around digital assets. I want to go to a clip real quick because this gets into kind of giving Tom Lee his roses. Take a look.
I mean, Tom Lee is he a god? He's a demigod at this point. I mean, he's not afraid. We people laugh at him when he says things, and then next thing you know, he turn around and exactly what he says happens. Yeah.
All right, so from this, if you look at his performance, Tom Lee, he's been, and I would agree with Ryan here, is that he has been, I would say, the most bullish thing to happen to ETH, that definitely this year. You look at this guy, he has been calling Bitcoin for quite some time. This was in 2017. He was calling for a 55K when it was at 2. People were laughing at him, and that is exactly what they were talking about earlier on CNBC. And you look at further into this, every mainstream investor just spent the last 8 years watching Tom Lee do 5,000% on his Bitcoin price calls. If he is even remotely close to right, based on his movement into Ethereum, guys, we may be in for a big, big ride as Ethereum starts to move forward as well. Other things that happen, of course, you've got to consider tariffs. That will continue to put a little bit of pressure on the macro side of thing, and that, of course, is President Trump threatens severe tariffs if Russia if no deal is made in the next 50 days. We're also starting to see a little pressure on the EU. EU is now trying to team up with other countries to try to put a little pressure back on the United States. We'll see how that plays into this going ahead. August now is a new date as he continues to kind of kick the can down the road. Look at these tariffs. And this is going to essentially boil down to about $300 billion in revenue for the United States just in 2025. And that's the conservative estimate, $300 billion. This could get in where it could be $500 billion. The first time we've seen surplus in this area. So whether you like it or not, it seems to be working. Now, the key here is, does this put pressure on American consumers? So far, it has been not the importers that or the exporters that have been taking price right now. It has been the importers, meaning the companies here in the United States have been holding back inflation. We'll see the CPI tomorrow. If it comes in soft or on target, Chair Powell has got some explaining to do. We'll take a look at that. Make sure and subscribe to the channel. And of course, if you're not in the Diamond Circle, get in right now. It's a great place to get additional content. Follow me on X @Paul Barron. We'll catch you next time right here on The Paul Barron Show.